This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stock Box interview. I'm here with Alexander Scanlon, the CEO of Barton Gold, here at Mines and Money in London. Alexander, it's good to meet you in person. We've done a couple of podcasts together, haven't we, in the past? But to meet you in person is nice. Just first of all, give me an idea what the show's been like.
Look, I think it's been pretty busy. Obviously, we're still in a kind of early post-COVID world and people are getting used to traveling to conferences again. But I think it's a pretty good mix of actually dedicated, let's say, professional and semi-professional investors as well as retail investors. So it's been a good show. I think it'll continue to grow in terms of busyness over time again.
I noticed you were doing a talk earlier. You were talking obviously about the company. Did you see a lot of people were engaged with what you were talking about?
Yeah, I think we're fairly fortunate. We had a pretty good degree of interest. So it's always nice when you see people coming into the theater while you're speaking as opposed to going the other way.
Indeed.
So I'd say you had a good audience.
Excellent. Okay. Well, we're going to talk about three different things today. You've got obviously the Gawler mill. Let's start with that because you were doing a clean-up there. This is a mill that's owned by the company, and you actually managed to get gold sales of $1 million US, didn't you?
Correct. So we own the only gold mill in the central region of the Gawler Craton in South Australia. We acquired that mill because it's really a pretty strategic cornerstone for the region. We are focused on large-scale exploration to redevelop much larger mineral resources in the first instance. We already have about 1 million ounces of resource, but we don't want to rush the restart of that mill. But we did go through the mill and do a little bit of a clean out. So we, during April of this year, we pulled out a little under 2 ton of concentrates from the mill, and we sold about $1 million Australian dollars worth of that. So we probably still have $600,000 or $700,000 of concentrate that we haven't yet sold.
Well, that's really good that you got that quite easy cash flow there, sales to the gold market, and it's all part of restarting your mill anyway, that of course is going to help take the feed from the Tarcoola and the Tunkilla projects.
Correct.
So let's start with Tarcoola. You can see the map there. Everything is very clear how close everything is. And on Tarcoola then, that of course was a previous mine, wasn't it? Perseverance.
It was, yeah. So the Perseverance mine was actually developed on the site of a really high-grade historical mine. So this dates back to the late 1800s when South Australia had its gold rush at exactly the same time as Western Australia. And this is when the old-timers were sort of mining gold at grades of 30, 40, or 50 grams per ton, just from high-grade outcropping veins. So more recently, in 2017 and 2018, a company dug a small pit there based on a small known resource, and it probably produced somewhere around 50,000 ounces or so from that pit. That mineralization was going to our central Gawler mill. So in 2018, the average feed grade from the pit was probably about 3.8 gram per ton. So it was a very rich, very profitable operation.
Indeed. So what stage is that project at now then? I know you recently expanded the license area, didn't you, and got some permits to actually go and explore.
Correct. So we've actually been bringing a lot of new technology, so systematically building the geophysical picture of the region, because you have the existing pit and with some very interesting high-grade extensional drilling results, both to depth and along strike, where we found an entirely new gold zone just at the pit wall. What's more interesting is that we think we may have repeats of that high-grade open pitable mineralization right on the mining lease. So there might be 3 or 4 of these just on the existing mining lease. But then as we look out over the next 10 kilometers, we've identified a system of repeating shears that are identical to the one that created that high-grade pit. And these plumb into the same intrusive bodies, which were the engines of mineralization across the Gawler Craton, including for Olympic Dam, which is obviously a very well-known operation. So the big picture really is the big picture, and the more that we build that out, the more runway it gives us to essentially start stage 1 operations using the existing mill, and then look into expansion into our larger stage 2 operations, which is where we combine Tarcoola and Tunkilla together. Okay,
so you're going to combine them both together. But the first stage presumably is to do some exploration and sort of find what's there, really.
Correct. So the Tunkilla asset is only 70 kilometers south of Tarcoola. Mm-hmm. So we're the first company that actually kind of owned them together view them as a co-development asset because 70 kilometers in the modern contextual setting is actually just satellites to one another. So the more interesting that one becomes, so too does the other become more interesting. We acquired Tunkilia in 2019. At the time, it had about a 560,000 ounce resource.
Okay.
In 2020, before becoming a public company, we upgraded that resource to 965,000 ounces.
Okay.
And then we completed our IPO in June of 2021, and since that time, we've done about 30,000 meters of drilling. So we're actually just now in the tail end of a 14,000 meter drilling program. So we should have, from Tunkilia, about 14,000 meters of assays to release during December, January, February, and March. And then our plan is to release an updated mineral resource at the end of March. So this is targeting both the existing historical footprint, and most of the historical drilling was done on that footprint when the gold price, the US dollar gold price, was less than $800 per ounce. So we're in a very different sort of search domain economically now. We've also found, in the past 12 months, we've announced 3 new gold zones for over 2 kilometers of new mineralization. So we've almost doubled the total mineralized strike on what is already a 1 million ounce deposit. So we think there's growth potential in multiple ways, and that will underwrite a much larger development, much larger stage 2 development, which we hope will see Barton fulfill its ambition to be producing 150,000 ounces per annum of gold in 5 years' time.
Okay, so to producing 150,000 ounces of gold within 5 years. Okay.
Correct.
At what stage then, if you've already got nearly 1 million ounce resource in there, there's an awful lot of assays to come through. The market can anticipate them quite nicely running through the next 3 months into the new year. At what stage do you say this is commercial and you can actually start getting the stuff out the ground and into your mill?
We're starting to look forward now into thinking about what is the development proposition and commercial proposition. Since IPO, we've really been focused on proving our geological thesis that indeed, while there are these discrete incidents of gold and multiple historical gold mines and operations, that there's a much bigger sort of thesis here, there's a much bigger story, and that these assets grow. So we have been drilling aggressively, testing this thesis aggressively for the past 18 months. We're now planning to grow it in March 2023, and then hopefully we'll actually step out even further and grow both Tarcoola and Tunkilia even further before the end of the year, and really just show the world, look, this is what you understood, this is what we thought it was, we've tested that, we validated it, we grew it again, it's gonna keep growing, so now we can start thinking about development. So 2023 we think is going to be a very transformative year in multiple ways.
We talk about sort of proving your thesis there. Are you able to get any early signs of that yet, or do we have to wait for the results to come through?
Yeah, look, our geophysics at Tarcoola have essentially identified, looking through cover, a number of areas that we think will host repeats of that high-grade pit at Tarcoola. So the final test is to actually go and drill it. So we're actually going to do some more seismic work and then validate that. And that's actually being co-funded by the South Australian government. So we have a very strong working partnership with them. I think that's sort of, just before the proof in the pudding, if you will. We're really building that thesis because we want to aim quite carefully. We're aggressive in our exploration, but we're careful with the capital, if that makes sense. At Tunkilia, we really have moved past that proof of thesis because the 3 new gold zones, in particular the latest one we announced in September, that is a full 3.5 kilometers away from the original footprint. So it's a definitive step out, a definitive proof that indeed this mineralization does continue on a much, much larger scale. And now we just need to continue to fill in that footprint and then build up, or probably more accurately, build down to build up the resources.
Okay. So you mentioned there about funding, some grants from the Australian government. Of course, you've got good cash flow coming through from the Gawler mill at the moment, and some more to come. What's the funding situation looking like? Because of course, a lot of drilling going on, it costs a lot of money.
Correct.
So what's the funding situation looking like for you to take you through the rest of the exploration plans?
Yeah, so one thing for us completing our IPO last year is we capitalized very, very well. So we knew we wanted to spend about $10 million and we raised 15 instead. So we had a pretty good sense that there was a bit of a hard market coming, and we wanted to make sure that we could stay aggressive and keep flying through this market, because it's one thing to spend money and raise money in a difficult environment, obviously you're incurring additional cost, you're bearing additional dilution. It's quite another to actually stop doing work and just wait for a better market. When you decide you're going to restart work, it can take 6 to 12 months to actually raise that capital, organize all of your field logistics again. So we wanted to make sure we could stay in motion while the rest of the market was slowing down. So we still have now, almost 18 months after IPO, by Christmas of this year, we will have completed around 30,000 meters of drilling. As of the end of September, we still had $10.3 million in cash. And that reflects this sort of dual track strategy that we have of very carefully and deliberately spending money, but then also we've generated about $3.5 million in revenues since our IPO from surplus equipment sales, gold concentrate sales, and then we also lease some of our camp out to third parties. So we have this sort of active income coming in, and that will fund us going forward. So we're in a good position to keep spending hard in a way and keep growing, and that really is one of our unique advantages in the market.
Okay. Excellent. So mineral resource estimate update Q1
Correct.
Next year. You mentioned about 2023 being a very important year for the company. What can we look out for? What are you hoping? We're at the end of this year now, nearly 2022.
Yeah.
What would you like to be? What position would you like the company to be in a year's time?
Well, so as mentioned, we are aiming to have a resource update out in March.
Yep.
That update, and I think some of the results that we would expect to be coming out and feeding that update should also give us a clear forward strategy about where we're aiming for further growth and discovery. So I would hope that we'll be able to get back out in the field, test existing extensions, but also new targets that we've also identified, which are high priority, and try to come back actually with a second resource update by the end of the year.
Okay.
Or make a number of new discoveries that support this continued growth objective. And that will then allow us to come into the end of year saying, look, we acquired these assets, we grew them pre-IPO, we've grown them again, they're going to keep growing, so now we can actually look forward to development planning.
Okay.
So we're sort of really shifting forward now and looking from that proof of geological concept
Sure.
to the resources growth concept, and then quickly also looking forward to that now supports a development proposition.
And that's when a PFS would come, a DFS, etc., the more significant studies.
So we'd be looking to shift towards a study mindset towards the end of 2023.
Okay.
And release study results during 2024.
Okay. What would be your ideal MRE? Have you got a number in mind?
Look, I think a conservative goal for us is to establish a 2 million ounce resource base, because that gives us a very strong base to target that 150,000 ounce per annum operation.
Okay.
Now, we don't need to necessarily have all 2 million ounces established before starting studies. The reason being, if we've grown it, if we have confidence that it's going to keep extending, we can start focusing on that development model while continuing to drill, and knowing that if we have an initial 6 years today, that while we're doing studies, we'll keep infilling and add years 7, 8, 9, and 10.
Okay.
What we're exploring now is actually just a very small piece of the land that we have, and the areas that are mineralized have considerable regional extensions and structure. So our hope is to get into stage 1 operations that might be 50,000 ounces, stepping to that next stepping up to 150,000 ounces. But even then, by the time we start that, hopefully we're looking beyond that into the next 20 kilometers of shear, and we're actually thinking of the next stage of growth beyond that.
Okay. Fantastic. Well, it sounds like you have ambitious plans, and there's a significant projects here that you're growing pretty rapidly. I mean, when it comes to your market cap, do you know where you are roughly now?
Yeah, I think our market capitalization would be just around $30 million.
Around 30 million Australian, okay. And you're only listed on the ASX, is that right?
Correct, listed on the ASX.
Okay. Any plans to list in London or the North American market so that investors can get access?
We've obviously looked at things like an OTC listing, a Frankfurt listing, and obviously we IPO'd during the COVID lockdowns, right? And in Australia, that was really a lock-in. So we've been quite limited over the past, I would say that the 12 months post-IPO and the 6 months prior IPO, actually very limited in getting out and talking to people. So much of what we're doing this year is actually getting out and making up for that time. So we're trying to sort of build that increased awareness. And I think as we go forward, if we feel that indeed there's essentially demand knocking on the door, we'll look at opening those doorways. But what we have found is we actually have a fairly significant number of North American, UK, European, specifically German and Swiss investors already coming on the register.
Okay.
And there's a lot of ways that people can buy shares in the ASX now without necessarily having an OTC listing or a Frankfurt listing. A lot of people use an interactive broker style account where you can basically trade any asset on any exchange any time of the day. But there may be a point in time where we say, okay, there's actually significant demand that isn't comfortable using an interactive brokers, and so they need a traditional brokerage relationship with a listing in their market. And we would certainly look at that in due course.
Excellent. Well, thank you very much, Alexander Scanlon, the CEO of Barton Gold, for your time today.
Well, thank you for having us.
If you enjoyed this interview, then give us a thumbs up, a like or a retweet. Subscribe to us on YouTube or follow us on Twitter and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programs at stockboxmedia.com. Thank you for watching.